Hello students, I hope all of you are well. This is Rajan Khay, your mentor. Today we're gonna start National Income Accounting. This is first video lecture we will be updating you. Before starting this topic, I just discuss with you what are the outlines of this video lecture. First we discuss national income. I know this we already did in class, but I just want to recapitulate this. Then after that, we will be discussing national income accounting methods, means how could you able to compute national income practical questions. We have three methods to calculate national income. First one is value added method. This we gonna finish then this video lectures. And income method, expenditure method. For that, those calculations of your practical questions by income and expenditure method, we will finishing these two methods in next 2 or 3 lectures. So after finishing this lecture value added method, we will be doing some practical questions. Then you will be able to understand how to solve. So before gonna start, I just remember you, just recapitulate you what is national income. You all of know that the national income is called money value of all goods and services in your economy produced by all the sectors, whether it is primary sectors, secondary sectors, and tertiary sectors, in an one accounting year. Once we make total of all the value generated by these three sectors, it comes your national income. Then what about the meaning of national income accounting? Accounting, you all know that accounting is called computations. So it means after understanding the meaning of national income, how could you able to calculate the valuation of your national income, value of your national income? So first method, value added income and expenditure. After understanding the meaning, I just make you understand what are the other things which we already did in a class. This is just a recapitulation of that. For value added method, you have to first you have to know about your final goods, because value added method itself is called, once we calculate the national income, it is uh, as all that only you have to calculate, you have to take only your final goods value, not the intermediate goods. So what's the meaning of final goods? You can understand, such an item that is meant for final use and will not pass through any more stages of production, means that goods where there is no need to pass that goods in any kind of further stage of productions, that is your final goods. Next is intermediate goods. Intermediate goods are those goods which are used to make those final goods, means to produce other goods. The goods which we used, those are called intermediate goods. Then there are different types of other goods. We know that consumption goods are there, capital goods are there. So these checkmates are there. You can understand that why I just made these checkmates, because you can once you see this highlighted area, you can understand these are the important things which you have to learn. And services, now consumption goods and capital goods, goods like food and clothing, and services like recreation that are consumed when purchased by their ultimate consumers are called consumption goods or consumer goods. Mean these goods which provide satisfaction to the consumer are called consumer goods. Mean these are not required for any kind of further process. So if these are not required any kind of further process, these you can say that these are called final goods or consumption goods. Now what are capital goods? Capital goods, we know that the goods which are in durable nature, and which produced other goods, those are called capital goods. So after understanding the meaning of final goods, intermediate goods, consumer goods, and capital goods, now let's see what is stock and flow. This we already discussed in class, stocks and flow. So stock is called anything which is measured, any variable which is measured at a particular point of time. So if you measures any variable on a particular point of time, you can say that is called stock. For example, we have number of things. You can say your money which you put in your bank account. If somebody asks you that, yes, tell me on exactly on this time, okay, what you are having in your bank account. So it means that person is talking about stock. Next thing is flow. Flow is called flows are defined over a period of time. So any variable which is measures on a particular period of time, that is called your flow. You can take example of your profit and loss account. You are preparing your P&L account for one accounting years, let's say from 1st April to 31st of March. It means in that years you are trying to just check your P&L account, that is for a period of time, because you have taken your period from 1st April to 31st of March. Next, gross investment, we discuss one point, because these things are required to start with that value added method. Gross investment is called your total investment, your total money which you invest in your business, or total money which invested in an economy. So it means you can say that these are called capital goods. Capital goods means anything or any kind of assets which is just putting into the business to produce the goods. So that becomes your gross investment. So your gross investment is nothing. These are called capital goods. Now next thing which is required to understand, that is net investment. Net investment is nothing. It is gross investment minus depreciation. Once you deduct depreciation out of that gross investment, it becomes your net investment. You can take an example of that. Let's say we have purchased one asset or one machinery of rupees 1 lakh in 2018. After using it for 2 years, if you going to sell it in the market, you will not able to get rupees 1 lakh. You will get less amount of that. It means you have used that asset for 2 years, so that's why the value goes down. The value which goes down, it is called depreciation. So that's why next year you have to take rupees 90,000 or 80,000. So that's why it is called net investment. So net investment is nothing. It is gross investment minus depreciation. So let's see next. This is important topic, circular flow of income. Circular flow of income means, for to understand the circular flow of income, we just take this example. It is assumed in the figure that there are only two sectors without the intervention of government as well as the rest of the world, means import and exports. It means to just get and understand what is circular flow, because your income is flowing. In this illustration, in this diagram, we have taken two sectors. First one is firms, second one is households. And we assume that there are no other sectors. Other sector means there is no government intervention. We are taking it as a closed economy, means government intervention is not allowed, government interference is not allowed, as well as there is no import and export, there is no intervention of rest of the worlds. So farms and households, it means you can say that factor services, household provides factor services to the farm. Factor services means labor, because if you are going to start business, it means you require labor. So labor is providing whatever you have started in the society, the same labor you can get from the society. Factor services, after getting factor services, you have to pay that factor payments to household, because after getting labors you have to pay wages to those households. So it means after getting factor services you are paying factor payments. And the same households also becomes consumer, because we know that in economics activity starts from consumer and ends at consumer. It means whatever they earn from the firms, they're just going to spend. So spending starts. So it means household giving money to the firms for their survival, for purchasing goods and services. So firms moves goods and services to households. You can see. So in this way, your circular flow of income is moving and it is ongoing process. So you can see that expense or income of one is called expense of other. So it becomes an axiom. Next, we are going to see the product or value added method. Now our method is starting. In product method, we calculate the aggregate annual value for goods and services produced if a year is the unit of time. So in product method, what we are doing? We are calculating annual value of goods and services. So annual value we know. Annual value means your total value means once you purchase any product. Let's take an example. You are purchasing one product of rupees 1000. So once you multiply 1000 into one product, it becomes 1000 means your value of goods and services. So to understand, let us suppose that there are only two kinds of producer in the economy. They are wheat producer or the bread makers. So let's understand by this example. Total production made by that farmer is rupees 100, means we assume this economy circular flow, there are only two firms, farmer and baker. Farmer produce the wheat of rupees 100. Out of this rupees 100, out of this rupees 100, he sent goods of rupees 50 to baker. So it means the intermediate goods for baker to producing bread, it becomes rupees 50. So once you calculate value added, you have to just take only what? Value of final goods and services. So final goods produced by farmer rupees 100 plus what is about the final goods produced by the baker? It is not 200, because 200 is total goods produced by. Out of the 200, 50 rupees he has purchased, means which is called intermediate goods. It becomes rupees 150. So once you make total of 100 plus 150, it means you can say total goods produced by two sectors, farmer and bakers, it becomes 250. We exclude intermediate goods, because otherwise if we add 250, let's say if we are saying 100 plus 250, 100 plus 200, sorry, it becomes 300. 300 would not be the total income, national income. Your national income would be 100 plus 150, because 50 already added into that 100 rupees or 200 rupees. So that's why you can say your value added is rupees 250, and it is called your national income. Now let's understand the important things. I just show you the one mind map. That mind map you can able to understand what is it. This is important. You can see what are the steps to calculate value added method. So this is easy way to remember the things, because this you can say that one pager, after getting all the information about national income, meanings, your types of goods, and all different methods. If you understand this one page, it comprises you whole of your chapter. So let's start with this. What is this? You can see methods of calculating national income. We have three methods: value added method, income method, and expenditure method. So steps all are mentioned in the steps: step 1, step 2, step 3, step 4, and last you will be there step 5. So in next video I'll show you how to just go with that value added method, how to remember these steps, how to calculate your national income by value added method. Thanks a lot.